Could this be a perfect buying opportunity for Palantir? Compared to its recent highs, it is looking relatively cheap now. However, is that necessarily the case when it comes to an intrinsic valuation for this stock? It is down 41% since its high, but Palantir currently still has a PE of 389, which suggests that this stock looks to be massively overvalued currently. And with regards to recent news, the US are currently seeking ideas for Golden Dome missile interceptors in space. And with Palantir's recent track record with the US government, they are definitely a high contender for this contract, which would of course be something which would push Palantir up massively again. But I don't really know the fundamentals of Palantir's manufacturing capability, but they would most likely have to enter into this with a different competitor, so it would be almost like a merger of a contract. But that is something that will definitely help push Palantir stock up if this does go through, but it will just be something to wait and see on, as at the moment it just seems to be something in which they are hoping to look for. So what can the chart say for Palantir currently? Well, it is above the 200 and 100 day. It's actually below the 100 day now, sorry, moving averages, which suggests that the selling pressure is definitely overweighing buying pressure currently, which is obvious, of course. This is going to push the price further down, and if this price does actually go below this 200-day exponential moving average, then it's just going to help propel this stock further down again. And on a 15-minute chart, it is the exact same story, with it just falling down significantly, and it is in a short position on the MACD indicator. Of course, with Trump's recent tariffs coming into play, the US market has kind of had a negative reaction. When I say kind of, I mean a very negative reaction, which is expected, but Palantir is a company in which shouldn't be affected by these tariffs, especially because they are mostly an American supplied company. Palantir isn't a company in which sells its products to overseas countries unless they are US allies, which typically, even then, it's not something in which they do too much of compared to their US contracts. So it's not really something that will affect Palantir. I think this most recent sell-off has mostly been due to a broad market condition. So now we're going to assess Palantir on a financial and intrinsic basis to help us see whether or not this company is fundamentally sound, to see if this is a safe investment and if it has potential for more growth. Spoiler alert, I don't think it does, but we will get onto that. First of all, though, let's look at the financials. Looking here on a retention rate, they have done really well as of recently, but the most recent quarter was only a 9.55% retention rate, which is still really, really good. That is still incredibly high, but it's just not as good as it previously has been. And the mean here is set at 16.2, which is still really, really good. The exponential trend line, however, is actually projecting this retention rate to decrease. If we move on to a free cash flow here, we can see that this is also really, really good, with them increasing quarter over quarter, with the exception of this recent quarter here. We can see that they have done incredibly well, and this is growing, which is exactly what you want to see. It's still not a massive amount in their free cash flow, and the difference between their operating and free cash flow is very minimal, which suggests that they aren't doing a lot of stock buybacks or obviously dividend payouts, which I don't think they pay any dividend of. After double checking, they do not pay a dividend, so yet again, it would be a bit better to see them doing a bit of stock buybacks, but it just suggests that they don't think that it's particularly in a sustainable position right now, which I don't think it is. Looking on a liquidity basis here, we can see that this is incredibly good. This is really strong, with it being around the 20 mark as of recent. That means for every dollar of debt in which they owe, they have $21.9 of liquid cash to pay this back in, which is incredibly strong, as in the world of business, cash is quite literally king. And on a 365-day exponential chart here, we can see that price and volume are correlating really nicely. We can see that volume is actually on the way up as well as price, but of course we have seen this massive sell-off within the last couple of months. Despite this though, the exponential trend line is actually pushing this further up, which is really interesting to see. I do think that soon enough we're going to see this start to fall back down, especially with the broad market conditions that we're seeing currently. Looking here on the normalized distribution for the year, we can see that the chance of a positive day is 55%, a neutral neutral. Oh my god, I can't say neutral today. A neutral day is a 15% chance, and a negative day is only 30. So that actually puts Palantir in at a positive position. However, of course, we need to bear in mind that they've done really, really well over the last year, and we're only just now seeing them start to sell off. So this is to be taken with a pinch of salt. And on a 91-day basis, it is pretty much the exact same story, just a bit more accuracy on the recent height. We're still projecting it to go slightly up on the exponential moving average, but I think this is going to soon start to point downwards. Looking here on some of the quick figures, of course, Palantir have a PE of 391. A 52-week high of 125 and a low of 20, this being a difference of 105, and the beta is a massive 2.72, which suggests that if you're not someone who likes a lot of volatility and a lot of risk, this could potentially not be the stock for you. They currently have an earnings per share of 19 and a estimated growth rate of 24.84%. With the margin of with the mean surprise rate coming in at 12%, we get a growth rate times mean surprise of 27%. And with this data, we can now conduct a intrinsic valuation. Spoiler alert for you lot, which is not spoiler because you can see it on your screen right now. This is really not looking good. When I can move my webcam, we can see the bullish intrinsic value is set at $11, which is really not ideal. With a margin of safety of 25%, this gives you an acceptable buy price at $8. Of course, with the price currently being set at 74, that means that this stock is massively overvalued. In fact, my bullish indicator metric here, whatever you call it, little chart, little graph, pie chart, I can't think of the name, dial, that's the one, is actually so far off that you can hardly see it. Looking on the bearish chart here, which just gets worse, we have an intrinsic value set at 604 and a acceptable buy price of $4.53. You might be thinking right now, wow, this is just incredibly bearish, this is not fair at all, but this same formula puts stocks like SoFi in at ridiculous valuations, like 118 to 90 on the low side. So it's not something that is incredibly bearish, it just goes off of the key metrics. So just going off of this alone, we can see that this stock is massively overvalued, but we don't want to just go off of this. We want some more metrics to base this off, and to do that, we're going to look at Peter Lynch's valuation, which gives Palantir a score of 0.07. Suggesting Palantir is currently massively overvalued, and this is including a dividend yield which should not be there. That should actually be zero. So I'm not even going to bother changing it because it's just going to get worse. Now, looking at a discounted free cash flow analysis here, we can see that on the left, bottom left here, or I'll pull it up here so it's a bit bigger, that we get a result on a 9-year basis of $80. So in 9 years' time, Palantir should be worth $80. In 3 years' time, Palantir should be worth $26. And this year, Palantir should only be worth $8. Of course, this is reflected in the PE ratio, so it isn't obviously something that should surprise a lot of you, but it is something which just shows that Palantir is massively overvalued right now, similar to how Tesla has been previously, and it still is in my mind. I don't think we're in times where momentum trading necessarily works anymore because of the bear market. I do have my whole momentum formula here, and if we do actually see where Palantir is, which it probably won't work because a few metrics are broken at the moment, it will be very low down. So as we can see here, no stocks are going yellow or green on the breakout score, indicating that no stocks currently look a good buy. Celsius is actually topping this at the moment, but even then Celsius is going sideways, so at the moment nothing is looking good. But here in 77th we can see Palantir, and it's given us a score of 5.45, which basically indicates that there is no momentum to trade off on this stock. But that is just a broad market condition at the moment, suggesting that it might not be that easy to just momentum trade it like it has been previously, where you could just ride this all the way up. I mean, you could have had a baby in the time that Palantir took to finally start to fall down. I think it was like 9 months of consecutive growth, which is just absolutely ridiculous. But that's just my opinion. What do the analysts think? Well, they're putting Palantir in at a hold at the moment based off of 25 analysts, 16 putting this at a hold, 1 at a buy, 3 at a strong buy, 1 at a sell, and 4 at a strong sell. And we also have a price target of the next 12 months to be a high of 125 and a low of 18. So that is a massively broad spectrum. I don't think I would put it anywhere near 18. I think I would personally put it around the $60 mark. I do think Palantir is massively overvalued, but I don't think it's going to fall down. I think it's very similar to Tesla in that regard. So to sum that all up, Palantir is definitely overvalued, but that doesn't necessarily mean to say that this is going to fall down massively. Broad market conditions are pushing this down quite significantly at the moment, but there are now new US government contracts to be won, and I think Palantir will definitely be a top contender for that. So it could definitely help push the price up, maybe not in the next couple of weeks, but maybe over the next year in total. But intrinsically, they are definitely overvalued. So my suggestion is hold if you own Palantir, but if actually I would be putting this at a sell. This is definitely a sell. It depends when you got in, of course. You need to make your own decision up on this, but it's just not looking particularly good intrinsically. This stock looks massively overvalued, and I think the hype has died from Palantir now. The momentum's gone, and that was what was carrying it in the beginning. So I'm going to end this video here. Hope it has been useful and you have enjoyed it. If you have, please do hit the like and subscribe. It'd be greatly appreciated. I do stock analysis videos like this every other day. So please do leave a like, subscribe, and I'll see you for the next video.